Number 1, is your business established or starting up? And the other one is, how fast do you need the money? So which one should you choose between a loan, a grant, or an investor? So how do you prepare for each of these options? Hello and welcome again to another episode of the Prosperity Thrive Drive channel. My name is Charity Mwangi, your host and a financial consultant. So today we are going to look at a question that have been asked by so many entrepreneurs and business owners on whether they should go for a loan, get a grant, or have an investor. We'll break down what each option really means, the pros and the cons of each, and we'll also give you relatable examples, including some mistakes to avoid. So let's define the three. So a loan is borrowed money that must be repaid with an interest over a period of time. So simple as that. It can come from banks, from SACCOs, from chamas, or even from the microfinance institutions or other lenders in the market. So characteristics of a loan, it must be repaid back. It includes interest and sometimes other fees, and it helps you build your credit history if you repay it well. So the next one is a grant. A grant is free money, but it usually comes with several conditions. It can either be given by government bodies, NGOs, or other development partners. The key traits of grants is that there is no repayment, it's competitive, and the paperwork that you need to provide is a lot, and also it usually comes with accountability. Number 3 is investor. So an investor gives you money in exchange for ownership in your business. And with ownership, I mean they get part of the shares of your business. So this can be an angel investor, a venture capitalist, or even a friend who has money and business interests. The key traits for this is that there is no repayment because the investor will get part of the shareholding of your company or business. You will share ownership and profits with this investor, and they may demand control or decision-making power. So let's look at the advantages and the disadvantages of each. We'll start with the loan. The pros of getting a loan. Number 1, you keep 100% ownership of your business. Number 2, a loan helps you build business credits. And also a loan, you can be able to access it easily. So some of the disadvantages of loans. Number 1, you're required to pay the loan with interest even when the business fails. Number 2, you risk getting into a debt trap and even being followed up by debt collectors. Number 3, repayment of loan is stressful if cash flow is not consistent. So let's now look at grants. Advantages of grants is that there is no repayment. It also boosts your brand if associated with respected organizations. The disadvantages of grants or cons is that they are very competitive. It requires clear documentation and proposals. It's usually tied to social impact or innovation themes. So let's now look at an investor. The advantages of an investor: there is no repayment stress. The investor will bring in money and sometimes even expertise. The investor may also help open doors and markets that you could not have reached if you operated that business alone. The disadvantages of investors: number 1 is that you give a portion of your business. Number 2, you may lose control of decision making. And then there is also pressure to deliver. So which one should you choose between a loan, a grant, or an investor? So these are some of the things that you should ask yourself and consider. Number 1, is your business established or starting up? Number 2, do you have consistent cash flow that can repay a loan? Number 3, are you comfortable sharing ownership? Number 4, do you qualify for grants? If the grants are targeting the youth, the women, or are impact-based, does your business align with those options? And the other one is, how fast do you need the money? So let's paint a few scenarios. So if you have a startup with no cash flow, you can try grants or even investors. If you have a fast-growing business that needs capital or expansion, you can consider a loan. If you have an innovative and scalable business, you can consider an investor or a grant. So let's look at the common mistakes and red flags that you should look out for. Number one, regarding to loans, is borrowing without a repayment plan. You need to have a repayment plan if you're getting a loan. Number two is borrowing for consumption and not investment. Number three is borrowing from multiple lenders, and that may get you into a debt trap. Now, concerning grants, one of the mistakes is copy-pasting proposals without a strategy. Number two is applying without understanding the goals of the grantor. Number three is missing deadlines and follow-ups. So you should avoid these mistakes when it comes to grants. So when it comes to investors, you should avoid giving too much ownership too soon. The other mistake is not having legal agreements with the investors. The other mistake is choosing investors that have clashing values. So how do you prepare for each of these options? Number one, if you're going to get a loan, have a business plan in place, have a repayment strategy in place, and have a budget. Number two, know your numbers. So for the grants, write a strong proposal because, as we said, grants are very competitive. Then focus on impact and sustainability. Then for investors, draft a founders or a shareholders agreement. You need to have that in place. And we've discussed a founders agreement in full in another episode. Please check it out. Then you need to know your vision and defend it. And also ensure that your business is valued. So should you go for a loan, a grant, or an investor? The truth is that there is no one size fits all. It depends on where you are in your journey, what you're building, and how prepared you are. But remember, don't just chase money blindly. Chase purpose, chase a structure, and the money will follow. Thank you for joining me on this episode. Please check out our channel. We've put up videos with so much informative content on taxes, on business, on compliance, on retirement, and so many other episodes. Please check us out and subscribe if you haven't done so. Like, comment, and share the episodes with your circles, with your friends, and with your family. Until next time, see you in our next episode.